Hey guys, how's it going? So this video is gonna be about Aurora. I don't know what I'm gonna title it. Something with Terry Booth on it, but it is true. Terry Booth does have some big news. At least not. I don't know for sure if it's big news, but according to Midas Letter, he delayed the interview for a week because the. I'll let him talk about it, and then I will repeat it after. So, let's begin.
Chat room who are asking. No, Terry Booth will not be here because Terry Booth has indicated that the events that he wanted to come on the show and talk about have been delayed by a further week. We will continue to leave our door open for Terry when he's good and ready. Let's see what else is going on today.
What I got was the event that he wanted to talk about was delayed for a week. So what is that event? I don't know, but I'm pretty excited to hear what that event is. And he might not be going back to Midas Letter next week. It might be a week after because sometimes the event that he's preparing for might be delayed a further week. Who knows? We'll see. We'll see what happens. But still pretty exciting. And if the news was to get released next week, if there is news, that could be a major catalyst for the stock price or maybe even the industry, depending on how big the news event that Terry Booth has under his belt. I'm pretty excited. Aurora hasn't released any kind of news for a long time, so I'm thinking that they have some kind of really big news in the pipeline that is almost ready. And I'm hoping that acts as a major catalyst for the entire industry. We'll see. Okay, so now I'm gonna bring up another video. This video is really important. He kind of dedicates himself on Tesla, but what he talks about is very relatable to Aurora, and I kind of wanted to bring it up and talk about it. So let's begin.
A lot of people are scared away of the volatility of stock prices, and as a result, they take more of a short-term view of investing. If the stock price goes up, they're willing to pull their money from the stock in order to preserve their gains. But as a long-term investor, I believe the biggest gains are those that you can achieve over a long period of time with a generational company like Tesla. In fact, if you would have purchased $10,000 of Tesla stock in 2012, that $10,000 would be worth more than $200,000 just 7 or 8 years later. But in order to achieve those type of gains, one has to have a level head with volatility. In fact, it's part of the investing game. Stock prices are going to go up and down, but I believe as a long-term investor, I need to keep my focus on where I think this company is headed long-term, and if the company is still on track to achieving their 10x valuation within 5 to 10 years. But here's some more thoughts I have on volatility, especially with Tesla. First, I think there's an advantage to getting into a generational company like Tesla early on. For example, my situation, I got most of my Tesla position back in 2012 and 2013 around $30. And because of that, it helps tremendously to withstand the wild fluctuations of Tesla stock because my cost basis is so low. For most people, though, you might not have had the opportunity to get into Tesla back when it was $30. But recently, Tesla was even under $200 just in June of 2019. And the way to take advantage of these dips is to have your own set and own framework of analysis where you understand the valuation of the company based on your own fundamental research and your own expectations and predictions. So you know when the company reaches a certain market cap that is just super undervalued and you believe that there is a clear and probable path that this company will 10x at least their valuation within 5 or 10 years, and then you can start to make some big, bold investments at that time. Now, a lot of people, they tend to be followers of the herd. They hear about Tesla from other people who get excited about Tesla or another company when the stock price is high, and they're not doing fundamental research. They're not doing their own analysis, and it becomes a game of just chasing the stock and going off of emotions. And with emotions comes fear, and so out of fear, you start to sell the stock or buy the stock, and it becomes chaos. The second thing that has helped me over the years with volatility is to have some type of clear goal in the future that you can benchmark toward. For example, with Tesla, when Tesla was under $4 billion in 2012 and 2013, Elon Musk had set a goal, a CEO incentive plan in 2012, that Tesla would reach a market cap valuation of $40 billion. Now, this became a goalpost of sorts, and you can track to see if Tesla was making progress toward that market cap valuation. And so when Tesla went to 200 and 100 and 300 and 150, I was able to keep calm because I'm like, hey, what's the core health of the company? How is the company executing toward this $40 billion market cap goal that Elon has set? In 2018, Tesla came out with a new CEO incentive plan for Elon Musk. And Tesla's new market cap goal is $650 billion or more by the year 2028. Now, this sets a new goalpost for Tesla for the next 8 years now, since it's 2020. But Tesla is aiming for an over $650 billion market cap, and we can look at progress toward that goal that Tesla has. Are they delivering? Are they increasing their production? Are they having significant progress in their plans for autonomy? And how are they going to monetize and really grow their revenue and profits over the years? By having these long-term goalposts, one's able to navigate the short-term fluctuations of the stock price more easily because the stock price really doesn't matter that much. It's more important whether the company is executing toward their long-term goals. The third tip I have is to understand the fickleness of human sentiment. Now, people are so emotional and so easily swayed. Oftentimes, there's this herd mentality. If one person says, hey, let's all go here, and everyone just gets excited about that, the whole herd and crowd and mob just moves in one direction. And this happens in the stock market all the time. There's these companies that are the darlings of the stock markets at some time, and then they're pushed down and they're outcasts. And this is magnified by human sentiment, where people get so excited about something, and then they turn their sentiments into something else. It's almost like high school, but amplified like 10 or 100 times, you know? It's so much about popularity, and the popularity is so fickle oftentimes. As an investor, I like to use this toward my advantage. When sentiment is down or depressed, I'm skeptical. I'm asking questions, say, hey, what's really going on? What's the reality and the truth behind this? When sentiment is just over-enthused and ecstatic, I'm also skeptical. I'm asking, hey, what's going on here? Is this sustainable? What are people getting excited about? And is this real and true? Oftentimes, people get excited just purely based off the stock price. Like when the stock price gets higher, people get more excited by the company, even if the business hasn't changed at all. And when the stock price goes down, people get less excited or even apathetic toward stock. Some people even get hostile toward it. But in many cases, the business hasn't changed. It's purely the human sentiment based upon the stock price. Over the years, I've gone through lots of ups and downs with Tesla as a Tesla shareholder. I've seen the price go up like crazy and down like crazy, and I've seen sentiment sway in massively different extreme directions. The funny thing is, Tesla as a company and as a business has been rather steady over the past 8 years. They've been incrementally executing toward their goals and producing and releasing great products, great updates, great features, enlarging their supercharger footprint, enlarging service centers, improving the performance of their cars, the efficiency of their cars, and all of this is just steady improvements that Tesla has made over the years, and it doesn't reflect accurately with the stock price. If you were to look at the stock price, you'd think the company is just going crazy. It's like one day they're doing fantastic, the next day they're just doing terrible, and that's not the truth with Tesla. With Tesla as a company, they've been very steady and steady in execution, and as a long-term investor, I think it's wise to look at the company as an indicator of the true health rather than the stock price. Lastly, as a Tesla shareholder, I don't take the stock price for granted. Meaning right now, yes, Tesla is over $600, and the shares that I bought in 2012 and 2013 have done a 20x gain. Right? They're 20 times more valuable now, but I don't count that as real gains until obviously they're sold. But I don't want to sell because I'm looking for greater gains, and I believe in Tesla's long-term vision to reach a much higher market cap in the future. Can Tesla's stock price drop dramatically? Yes, it can. There's many things that could happen. You know, there could be a sentiment change. There could be a recession. There could be some world crisis, some economic crisis. Who knows what the future is going to hold? Therefore, the current stock price of Tesla really isn't a great indicator of the future success of Tesla. Rather, I look at the execution of the company and how are they progressing with their products. I think at the core of it is the health and the superiority of their core products. How good is the Model 3 and is it improving? Do owners love it? What do they love about it? And how much superior is the Model 3 and Model Y compared to its competitors? And can Tesla defend that superiority over the years and increase their lead? I'm also looking at Tesla's entry into new markets that will open up new opportunities of revenue. For example, robo-taxi network has huge potential. Tesla Semi opens up a whole nother opportunity opportunity with logistics and transport. Tesla has amazing opportunities with Tesla Energy, and I think it's important to track Tesla and how they're entering these new markets and what their potential for growth is. Overall, I look at volatility as a natural part of the stock market and investing because humans are involved. And humans, being emotional by nature, they tend to bring all that emotion into investing. And I think as an investor, you can have an edge when you accept that volatility of the market and you accept the extreme nature of human emotion to go from one extreme to another. And you see that playing out with the stock price. You can discern that and say, hey, this is human sentiment going this way and this way. And you can stick the course and really look at objectively the core health of the company and if the company is really progressing toward their 10x valuation goals within 5 to 10 years. Anyways, I hope this video has been helpful. Please subscribe to this channel. It's going to help out. I share about investing, having a deeper thought out approach toward investment decisions. There's just so much reaction and so much emotionalism with investing, and so much of investing is fear driven based on the culture around us. And I'm trying to be a voice to what I believe is a much more effective and better way to invest.
I hope you enjoyed that video. This guy's, he seems like he's a very, very smart person. He bought Tesla back when it was $25, $15, and he hasn't sold. The reason why I sold out my Aurora position because I knew the stock price was heading lower and I wanted to try to catch the bottom. Did I catch the bottom? No, I didn't, but I got my average price on Aurora stock right now is extremely low because I was willing to sell out and rebuy at a lower price because I want to get the best value out for my buck when I invest into a company. So let's just look at Aurora, like how he talked about, how Tesla executed on the fundamentals. I bought Aurora back in December 23rd or something like that, around here. This is when I first got into Aurora. $1.65 USD. And then I bought some more around July, $1.63. And then, then the big run, boom. I should have sold out, but, I was greedy and I kept holding on, and the stock would, end up being very volatile. And it moved down and up, and I saw that the stock price, when it was up here, I was telling everyone that I was bearish on it, and I think the stock is in a big giant bubble, and people got angry and mad at me, and now I tell people that I think it's a fantastic price down here, and people are basically saying that this company is going to go bankrupt. So, and when you gotta look at when I bought the stock at, when it was around $1.76, $1.77. What did Aurora have back then? Aurora had one facility, the Aurora Mountain, 55,000 square foot, and that was it. They were building an Aurora Sky. They didn't even have the construction up at the time. They only had a concept, and but I bought it anyways because why? Because I thought of Aurora as an international company. I thought that Aurora was going to, the reason why Aurora built a facility at the Edmonton International Airport is they were planning to have fast shipments to the international markets, and that's why I was bullish, because I was looking at Canada legalizing and then the world legalizing eventually, and I had a long-term prospect, looked at it as a 5 to 10 year investment, but that wasn't the scenario. Canopy created a bubble and the stock price rose all the way up to $10.65. I could have sold out, could have took my profit, and but I didn't. I was greedy, and then I lived through the volatility. And then at a certain point, I learned that, I learned more about the stock market. So, and I learned about stock market, possibility of stock market crash. And when the stock rallied back to here, I wasn't in the ride from down here to up here, but I was extremely bearish on the stock up here. I said that, it's not going to keep going up. it's gonna fall. People got really pissed off at me, and ever since then we were literally on a downtrend of all the way down 80%. Could it go down lower? It absolutely could, but down here I would say is an opportunity, really. But again, this is my opinion, and some people still argue out there that Aurora is going to go bankrupt, which I really don't think will happen. But we'll see if that scenario happens. And remember, Terry Booth might be coming out next week with some positive catalyst news, hopefully. But we'll see what happens. Anyways, thanks for watching, guys. I hope you enjoyed my video. Subscribe for future updates, and have a great day. Bye.